What up, everybody? Welcome to another class full of gems here at BTSMC. All right, this class is gonna be jam-packed. We got so much going on in the world. People saying we going to World War III, all type of stuff. It's like, hold on, before we go to World War III, can we make some money for real? So, no, let's get better at trading real quick. I got a lot to talk about regarding last week's price action. I think it's a lot to take away. We're gonna discuss all the best setups from last week, what you could take from it, how you could learn those setups so you could implement it this week. And then of course we got the chart debate. I know a lot of y'all want to know the answer to the chart debate. And then after that, I'm gonna tell you all my market predictions. Whether you're a forex trader, a futures trader, options trader, a crypto trader, you're gonna get predictions in your market, so you can take advantage of those this week. And so that being said, let's get right into it. So, imagine you came to the chart and you seen this. Do you guys have any analysis on what would happen or what you would do? Um, can I just hear some things in the chat? Are you bullish or bearish right now? That's all I want to hear in the chat. Looking at this chart, are you bullish or bearish? That's all I want to hear in the chat right quick. Are you bullish or bearish? I just want to see what y'all say. I see a bullish, I see bearish, I see sitting on my hands, I see bearish, bullish, bearish, of course, bullish, bullish. Oh wow, hold on. It's like literally even, but low-key the bears are starting to take over. The chat is getting flooded with some bears right now. I see a couple people saying we in a range. Heard you. Ash Cash says bullish if we hold that Bissy. Copy. You know what I'm gonna tell y'all? You see how we have 45 different answers in the chat right now? The reason being is we have no context. And so this is why I want us to zoom out so we can get some clarity. So I did that just to kind of mess with y'all, to show you that there's some people validating bullishness, some people validating bearishness. Like, hey, listen, there's no context on your trade right now. This is what you guys do though. A lot of you guys go to the chart, to the 1 minute time frame, and start pressing buy, sell, buy. Like, hold on, zoom out. What is going on from the higher time frame? And then you want to go out to the lower time frame. So this is actually in real life what happened. I'm about to break down a trade that I took on live on Monday. So on Monday, this is what I saw in the hourly time frame on Monday. And now I'm gonna ask you guys, okay, are you guys bullish or bearish at the moment? Are you bullish or bearish? Now I'm gonna ask y'all, now that you came to the hourly time frame, are you bullish or bearish? What do you guys think? I'm just gonna see a few answers. I see bullish at the moment is bullish. Okay, I see bullish. All right, so somebody said bearish. There's a lower high. Hold on. Which lower high are you talking about actually? Because I'm about to say this price leg right here is still in development, so it might keep going higher. But maybe you mean this one. But it also did not make a lower low either. A lower low did not come. We made a higher low, so that could be, an argument against what you're saying, just so we clear. But I could say at the moment, I think even in the super short term, a lot of people would expect price to run these highs. I mean, we're right there. We might as well just run those highs. And honestly, I agree with you. Now, here's what I need to happen for us to run those highs. From an hourly perspective, I would need price to hold this bullish fair value gap right here in order to run those hourly highs. All right, so I'm gonna put this on my chart. Remember that this blue area, actually, I'm gonna just highlight it. I'm gonna just label it. It's all good. So it's a 1H hourly bullish fair value gap. That's on y'all chart now. As long as we hold that on bullish, because to me, if we don't hold this, I have nothing else to frame bullishness with. So first thing I do is when I get to a chart, I figure out the direction of the market from a higher time frame. And then after that, that's when I start to look for which PD rates could support that bias. And so this hourly bullish fair value will support that bias. This is a very important one in context. In context is very important. Copy. So let's get to some lower time frames. By the way, on the 15-minute, you'll also notice that we have a bullish fair value right here. I'm trying to highlight it. Hold up, one right there. I would want to use the upper half of that one if we're going to use it. Okay, I would want to use the upper half of that one on a 15-minute chart. But because it overlaps the hourly already, I'll just keep the hourly one on the chart. And so this is literally what I'm looking at heading into the live trade. All right, and so let's move it along towards market open. This is 910. Okay, we getting closer to market open. All right, here we are, people. This is what it looked like. So this is 927. Boom, 928. Makes a move down into the inefficiency. So when it did this, right, I was like, dang, I kind of really. Oh, my fault. Hold up. I'm gonna answer this question in chat real quick. How did you recognize that fair value gap? I think when you learn what a fair value gap looks like, you can't unsee it anymore, right? Like, so once you study hard, right, to know what it looks like, you can't unsee it. So it's pretty easy to recognize it, I would say, because I'm so used to seeing them. I can't unsee them literally. But I also am able to know why it's important, because not every fair value gap on the chart is important, but it was important in context. And on top of that, one thing I could say is if you looked at that price leg on the hourly time frame, that was the only valid PD array, meaning that was the only valid fair value gap. That makes sense if we're gonna run these highs. And so that's why if I believe in this yellow line on top, I know that this blue area needs to hold in order to get to yellow. That's what I know. And do I always chart on the hourly for the fair value guys? I always do a top down. So I really actually, anytime I get to a ticker, I start with the monthly and I work my way down and I build a cohesive story for price. So right now, just in the super short term, I do believe price is bullish into the yellow line. And that's from looking at the hourly time frame. So I would want that hourly fair value gap to hold in order to maintain that bias. All right, cool, perfect. So I mark up, so like I mark up the hourly, I mark up every time frame. Well, if there's something to mark, notice, picture what we did, for example, on a 15-minute chart, right? I told you guys that when I went to the 15-minute, I noticed we need to hold this fair value gap, but we need to hold the upper half of that. But because the upper half of that is simultaneously, look, I'm gonna highlight the 15-minute one. The 15-minute one is the green box. The upper half of the green box is simultaneously the hourly bullish fair value gap, right? So because I know we need to hold that area, I don't need to mark up both of those. I already know that, okay, as long as we're holding the hourly one, we're simultaneously holding the 15-minute one. When I come to the 5-minute chart, and this is what I do, I'm literally scanning on the 5-minute chart, I'm looking for imbalances. But really, ultimately, I already know no matter what, we're not going to lose the blue area if the yellow line is the target. And if we did lose a blue area, guess what? The yellow line is not the target. I wouldn't be tripping about that yellow line anymore. And guess what I'll be doing? I'll be targeting these lows and even lower, because the hourly just showed me a failure swing. A failure swing is when we make an attempt to go run a swing point, but price fails to hit that objective and it turns back around and goes in the other direction. So for me, it's always if-then statements. And I suggest that you really learn price action at a deeper level so you can really know how to make if-then statements in the market. Because for me, it's like, if we're bullish, then we will hold this blue rectangle. If we're not bullish, we will not hold that blue rectangle. So I would give up on bullishness if this doesn't hold. And so being that, if you just look at the top of this fair value gap to the bottom of the fair value gap, it's about a 20-point range. Price comes in here, and I'm like, man, honestly, I'm getting in before open, because for me, I'm gonna just have a stop loss slightly below, because fair value gap, sometimes we could wick outside of it, but the bodies will hold it. I'm gonna have a fair value, I'm gonna have a stop loss slightly below, and then I'm gonna just trust what's gonna happen when the market open. Simply put. So let's see what happens. I know it's risky to trade a 930 candle, right? But I trust in price action. Like, I trust in what, the areas in the market that's supposed to hold. So now you see 930 pops out of there. And what is something else that you could have used to I guess further validate this fair value gap? Maybe some of you who've been following me for a while may have noticed the manner in which price was moving into that PD array. So we went over this even last week when I talked about the manner in which price moves leaves clues. Clues were left on how we were dropping. This is not what a real bearish reversal looks like. Like, trust me, if they were gonna fake the yellow line, it wasn't gonna drop like that. If they was gonna fake the yellow line, it would have been a much more aggressive drop. Believe me when I say that. So seeing this, I already know, like, yeah, I definitely like this area to take us higher, because This is what we call engineering liquidity. There's a lot of people that have stop losses right here, right here, right here, right there, right there, right there. All of these are stop losses, high frequency trading algorithms. So ultimately, I already know we're gonna make a move to take out everybody who had a stop loss right there. They just got destroyed in one candle. We love it. We love it. We love it. We try to trade with the market makers, not against them. And of course, you want to take it to and through the yellow line. All right, cool. At this point on the live trade too, what I will be looking for is on this fair value gap that we just made, I want to see price hold the upper half in this context. All right, cool. Okay, so far so good. Okay, so far so good. Things are good. In this context now also, and mentees, maybe y'all can see why. Well, you guys better see why, or else y'all gonna be in trouble in class again. This red wick is very important now. I wouldn't want to see price invalidate that red wick. Okay. So then, as price, price makes a retracement here. Once again, this red wick is important. So this goes into holding trades. So as you are in a profitable trade, I don't want you to be like stubborn with your stop loss. So like at first my stop was down here, right? To me, I would probably trail my stop to maybe about right here before I cut a trade, because I want this red wick to hold. I really do. I also want the upper half of this 1 minute bullish fair value up to hold. But this is how you can, trail your trade. And then as we make a higher high here, maybe you scale it up here again and you say, hey, I want to see and make sure that this fair value gap that we just made could hold. And what's the theme here? What's the theme here? The theme is fair value gaps are a major part of everything I do. Holding trades, entering trades, exiting trades, knowing market sentiment, everything. It's so don't get messed up and think that every fair value gap is important, because it's not. But if you know the important ones, it could change your life. Where would you place your stop once you're in profit? Well, I'm in profit here. So like I said, at first when I got in, it was right here. As he moved higher, I would want to see us hold the upper half of this fair value gap. And then as we made this high, I might keep it there. Maybe I'll put it under the red wick. Either one, all of that is valid to me. But I'm trailing it based on areas that price shouldn't invalidate. And like same thing here, I don't want to see price invalidate this fair value gap if we're truly bullish. And so, you would kind of let it fly. And just same thing, you just continue to trail. So like, at a point, I will be trailing it here. At a point, me personally in this situation, I probably would. I mean, it depends what we accomplished. I forgot to mark up. There was another high up here. Yeah, like okay, yeah. So being that we have a high right there, and I see the proximity to it, it would take a lot for me to sell this play. Let me just check another time frame right quick. Yeah, honestly, I personally wouldn't want to see it invalidate this fair value gap. And I think this is where we exited in real life, because it's holding it right now, but like, and when I say holding it, I'm talking about bodies. Bodies are holding the area, but like at the same time, we're about to get stopped out for my memory. This is where we get stopped out, I think. Okay, cool. Because I don't want to get caught in a reversal. So I'm actually glad this came up. Like, so we want price to run to the yellow line, right? But typically in this position, this fair value gap would not get invalidated prior to running that yellow line, typically. So once we close under it, I'm like, okay, cool, I'm done. Because how many times in these classes have I showed y'all a trillion examples where somebody's just hoping and holding? Like you're watching an important area get invalidated and you're like falling in love with the yellow line on top. As price trades away from you, now you negative and you're like, no, I thought you was going to the highs. Like, stop doing that. Stop doing that. It's better to take profit right here because you had a reason to, not that you got scared. You had a reason to. You thought this fair value gap was important. It didn't hold. Take profit versus letting price reverse on you and you made a good play turn bad. So in real life, we did take profit there. It does go higher. I remember this clearly now. It does go higher eventually. And it gets to the target. Cool. And then it consolidated here for like the rest of the day, literally. It's consolidated here for the rest of the day. Monday was disgusting, but we were able to get in on Monday from down here. So we got in right there and we sold right here. So we caught majority of this uptrend. Really, really smooth trade. All right. Now, as far as which fair value I consider important, I think that because that question came in the chat, that is a layered topic. That is extremely layered. That is actually a lot of my mentorship right there is building that out. And so I really hope that y'all can join that so you can get like the in-depth teaching on that. If I even tried to teach that in a free class, we probably will be here till Thursday. Like with no breaks, no lunch breaks, none of that. We'll be here till Thursday if I tried to talk about that. It's too layered of a topic because it's not necessarily a cookie cutter answer. It's not ABC. It's a lot of nuance. So what I do is I teach a lot of market scenarios. Typically when this happens. Hey, if price is going for this objective, this fair value gap will be important. If it's not going for that type of objective, this one will be important. Let's stand at third. And that deeper understanding is what is missing on YouTube and what most people, 99% of fair value gap traders don't know those things. They just, it's actually pretty frustrating to listen to. But all right, so whatever. Like I said, here, let's see. We consolidated here for so long, people. But I wanted to show you guys that trade because what it showed you is the market, you don't have, like, I'm not gonna say I recommend getting in before market open, but I think if the risk to reward is there, it's worth a try. Like, y'all gotta think about it like this. I had like a 16-point stop or something when I got in right here. But I'm targeting something that, because I didn't think it's gonna stop here. I expected it to run these highs, right? So a 16-point stop, and my target is, how many points away is this? I don't feel like doing the math. I think we could all tell. Like, even if I just put the risk to reward box on it, let's go ahead and check this out. So something as a risk like that for a target up here, I think is really a solid trade. You feel what I'm saying? A really solid trade. It's just worth a try. The worst thing that could happen is you take a small loss, size your plays correctly, and live with that result. I just trusted the technicals. I'm not really tripping on a 930 candle because price is gonna do what it's supposed to do. The fair value that we used, everybody, was this one right here. That was the one. Took us to the target. Beautiful. Gotta love it. And then, like I said, we ended up consolidating here for the rest of the day. Okay, so now on to the next market day. And you say, what about the zones charted? Which zones charted are you referring to, Jay? And while I wait for your answer, I'm gonna pull up what I said next. So, like, basically, you guys could look at the chart right here. Okay, real quick. So Jay said the yellow lines. This is previous week highs up here. At the bottom is previous week lows. So what happened so far, this is what we just went over was Monday. What happened so far was price gapped down on Monday, opened up, and then traded higher. And then the thing I just pointed to is 930 open, and 930 open took us to these highs up here, and we're consolidating right now. Okay, but we're inside of a major range. Obviously, Nasdaq's been in a crazy range lately. We're looking at previous week highs as a potential target, and we're looking at, of course, previous week lows as a potential target. So take a good look at this visual, and I want you guys to, in your head, even without some hindsight stuff, just think to yourself, okay, make some if-then statements. This is literally what I do, make if-then statements. So, like, to me, I'm like, okay, in this context, I typically would want to see price hold the upper half of this hourly bullish fair value gap. If we are bullish, so I'm making an if-then statement in my head right now, like, yo, if we're bullish, then the upper half of this will hold. If not, it's very likely we're to make a deeper retracement. But when I look at what we're quote unquote retracing into, there's nothing to stop price from literally running to these lows. What do you mean nothing to stop price? I look for fair value gaps, people. I'm telling you, it's the bet. I'm telling you, if there's no fair value gaps here, it's a telltale sign that we're actually probably going for these lows. Okay, plus we engineered liquidity. I told you guys, anytime price leaves these equal lows, keep your mind on those equal lows because it will come back for that later once order flow shifts bearish. Once order flow shifts bearish, those equal lows become the target. So what most people see as a support level, I see as a target. It's just knowing when price is going for that target is the skill set. So I know how to recognize order flow shifts. Once order flow shifts to the downside, guess what? Those equal lows become the target. On top of that, they engineer more liquidity because they made a higher low right here. So now you got a higher low right before these equal lows. That's a beautiful liquidity pool to go and attack. All right, cool. So that's if, of course, that's if we don't hold this area. And I just want to show you guys that's what I had put out in the afternoon, right after Monday, right? 5:07 p.m. on Monday. You can see I said, I showed you guys a 4-hour picture, but same thing, hourly, 4-hour, same thing. I wanted price to hold the upper half of this. Literally, would like to see 4H bodies hold the upper half of this to run last week's highs. Okay, if not, then we could see it drop into last week's lows. Simple, right? So y'all see what I said right there. Copy. So we have a whole if-then statement, and let's see how this go. So now let's. By the way, when we were at first consolidating in this area, ES had already lost their fair value gap. So I already knew when we were consolidating right here, like I already knew we was going lower. But here is the whole point. Here's the point I want to make about conditions. Understand this. We have a beautiful fair value gap right here that could have taken us to highs. Okay. And it did not take us to those highs. On top of that, but and my fault. And we've been in the range for a while. And the higher time frame really is pointing bullish. I'm talking about the weekly and the monthly. It's really pointing bullish. So do I really want to see price attack these lows right now? I'm not really trying to see that because it's against the higher time frame bias. So I don't. Let me see if I click the weekly real quick. Y'all can see what I'm talking about. Like if you look at the weekly, I think a lot of us, if you made a prediction, would say we're gonna go to all-time highs. If you look at the monthly, I think a lot of us would make a prediction we're gonna go to these all-time highs as well. So that's what I mean by when you look at the higher time frame, the higher time frame points more to highs than it does to the lows. And so that's why I really wanted to see this fair value gap work, but once it didn't work, I'm like, man, I'm not really trying to trade against the higher time frame, although I already know we're gonna make a move to these lows. So my point in saying that is because this is counter trend to me, even though I know it's coming here, because it's counter trend, I don't really necessarily want to trade the middle. Remember, we are in a very large range anyways, right? So I don't want to trade in the middle of a range. I think the conditions will be pretty trash. Plus, once again, it's against the higher time frame direction at the moment. All right, so keep that in mind. So when you look at the nature of the movement inside of this area, you can see why a person might not want to trade this. And this could give you an indication of which type of conditions to participate in. Because although I know we're going to the lows next, I don't want to participate in this. And so something that can help you with knowing what conditions to participate in is, of course, if you're looking at a range, don't trade the middle of the range. Trade the extremes, first and foremost. But not even just that, but it's like, if you know what the higher time frame is trading for and price is trading against that direction, if the movement is not aggressive, don't participate. So higher time frame direction, bullish, right? Are we moving backwards in an aggressive manner right now? No, this ain't it. That's not aggressive. What the heck is this? It's kind of telling me like, okay, I don't want to trade the middle. I'm willing to trade closer to the lows, but that's it. So this helps me like stay away from bad conditions, having overall context of what the market is actually going for right now. All right. So here we are. We starting to move. Hold on, I'm trying to get us to a certain point. But you can see, think about how people felt trading inside of this range, right? It's a lot of like back and forth. It looks like we bullish right now. I'm sure a lot of people started to get bullish right here. Boom. We start coming back down. It's in a choppy manner though. You feel me? It's in a very choppy manner. So hold on. What day was Juneteenth? It was Thursday, right? I'm trying to get to that. We almost there. But once again, I want you to keep in mind, as you watch these candles develop, I want you to keep in mind the nature of the movement. This is account blowing conditions. That's why I had so many people hitting me up just about the struggles that they had trading this range. And I'm just like, it's conditions. These conditions are predictable. You feel what I'm saying? But okay, we getting closer to the time I wanted to show. I probably clicked it too much. Let's see if I went too fast. TradingView just been lagging lately on the replay. But yeah, okay. So now I'm getting interested in price action. Okay, I'm getting real interested in price action because we're coming to these lows, and obviously you can see we got there, but I gotta rewind it a little bit to this time right here and kind of show you like the analysis we will use here. Okay, so 8 a.m. We right here. We right here now. All right. So I wake up in the morning on Juneteenth, and this is what I see. Once again, I knew we was going to those lows ever since we invalidated the upper half of this area. I knew he was going to those lows, but look how it got there. I am not interested in trading this, but I'm cool with taking the move to run this liquidity. All right. I didn't want the journey there. I just want the explosive move to the downside. Now, we have a target at this point. Not only do we have these lows that we opened up the week with, remember those lows happened on Monday morning. See the white line? This happened on Monday morning, okay? Or Sunday night, you know what I mean? If you trade futures, you know we really open that Sunday night. Same vibe, but this is the first candle of the week right here, the one that I just drew. So we have those lows, but then under that, we have the equal lows from the previous week. Okay, whenever we're gonna run out liquidity, if it's a legitimate move, we tend to run it out aggressively. So because we're getting close to this, what we call liquidity, I expect an aggressive move. So keep that in mind. All right, now let's go to the 5 minute. All right, on the 5 minute, I want you to think about what your mindset would be in this moment. For me, I'll tell you what my mindset is. On the 5 minute, I see we had a massive consolidation right here. Bad work. Who wants to trade this? This is bad work, right? But what's something I talked about in these classes a million times for y'all? I said, if you're going to leave consolidation, you want to leave it with what? You guessed it. Fair value gaps, facts. All right, cool. So if we leave consolidation, did we leave with fair value gaps here? I think so. Okay, and what do we say? If we're going to leave with fair value gaps, we would like to see those fair value gaps respected. So first of all, I didn't catch this drop right here anyways. But if I did, I would probably have, if I caught the drop, my stop would be above this fair value gap. All right, so just know my stop will be yellow line. That's my stop loss. If I did catch the initial drop, but right now I didn't. So let's see how I got my entry into this play. Okay, so we start pushing up into this area. This is 9:20 a.m. The market opens at 9:30. Okay, this is on Juneteenth. The market was only open from 9:30 to 1 p.m. 9:30 a.m. to 1 p.m. At least for a futures trader, it was open. All right, now, mentees, you guys might notice why I waited for the upper half of this 5 minute city. So one thing I teach my mentees is how to know which side of the fair value gap you would look for your entries on. In this context, this is something that we would look for the upper half on. So right now I'm not in the trade. Even though we in the fair value gap, I'm not in the trade. For me, I wanted price to come to the upper half before I enter it. So that's 924, 925, 926. All right, so let's say I enter right here. My stop is gonna be slightly above the fair value gap. It wasn't right there though. I remember my stop was like right here. And I just was gonna see like, yo, let's see what market open has. So this is actually funny because this is yet another play where I took it before the opening candle. And this is what I mean where it's like, yo, price is gonna do what it's supposed to. Simply put, like price is gonna do what it's supposed to. For me, the only how I like this play, everybody, like, hear me very clearly. The only how I like this play into the lows is if we hold this fair value gap. So why is it important for me to note for you guys? That's important for me to note for you guys because you need to know your invalidation areas. Where are you invalidated on your sentiment? I have bearish sentiment into the yellow lows, okay? But look above this area. What else above here is supposed to send us back lower? So you could technically have an if-then statement based on this. Like you could say, if this fair value gap, these lows. If not this fair value gap, we're going to make a move to take out this whole consolidation. You could say that too if you want to. Personally, I wasn't going to play the upside, being that it was Juneteenth, and I didn't expect too much movement, actually. So this was going to be my only trade of the day, which is funny. Like, I was just literally going to just take this with a stop loss above. And if it didn't work, I'd be like, all right, bro. You know what I mean? I'd have just chilled. But it obviously did work here. And we're going to see how that played. So, we come to the upper half. And beautiful, we start to drop. Things look really good. We're gonna run out these lows. Literally, things look great. Of course, we're aiming for previous week lows, and let's just see price makers move into that. There's just literally been no reason. There's like nothing to sell your trade on, so I don't feel like there's much for me to say here. This was a very clean, 100-some point trade, and we get to these lows. Now, if you're familiar with me, some of y'all are, some of y'all are new. I don't typically just sell at a target. So yes, we got to the previous week lows, but this is why context is everything. A lot of my targets are based on liquidity. Previous week lows is where I know price is trading to. Do I expect it to make an equal low? No, that's the whole point. I trade for liquidity. I'm not a support and resistance trader. So I'm looking for price to go through it, not to it, right? Not to it. I want it to go through it. Okay, so yeah, I believe we're going to go to the yellow line, but I really believe we're going through the yellow line. You feel what I'm saying? Liquidity, for new people, liquidity is basically like areas where there are pools of stop losses. So being that you see this yellow line was based on equal lows, most people see that as a support level. So people who've been long the NASDAQ have their stop losses, especially institutional stop losses, are below that yellow line, just below it or at that yellow line, because they're saying, hey, this is support level, price shouldn't lose this area. But they lack understanding on context in the market. Like, that's support until order flow flips bearish. Then it's liquidity. You feel what I'm saying? So now I'm targeting that. I'm making the move with the market makers to stop you out. So if you trade support and resistance, the times where y'all ever seen a support level that you getting calls on or you getting buys on futures, and you ever see hold on, let me just fix Cash. Cash, just watch your phone, Cash. So yeah, like, you ever get into my fault, you guys ever get into a play based on like a support level and price plummets through your stop loss? Like, what the heck? I thought it was support. You're like, I thought it was support. This look real weak. Yeah, that's probably because you were against the wrong order flow. Like, you're trading support when your support is really liquidity right now. All right. And so the question in the chat says, so you're looking for liquidity sweep, and then would you expect a reversal? It depends on what I'm expecting at the higher time frame. In this case right here, I was looking for somewhat of a sweep. I'm gonna explain that in a second, but understand that when I say liquidity, I'm not just only talking about liquidity sweeps. So if the higher time frame to me was bearish, I would expect continuation. So I don't think we're gonna come back. I'm not looking for a sweep. No. To me, because the higher time frame is not bearish, I'm very open to a sweep. Okay, so if you're not familiar with the term sweep as well, sweep is basically when you go through liquidity and you go right back up right after that. It's like they basically tag it, stop people out, and go right back up. That's a sweep. If you're going to displace or destroy liquidity, run through it, you're going to obviously run it and continue to the downside. So because I told you guys the higher time frame kind of points bullish to me, I was kind of expecting a sweep on this ticker. I was expecting us to run these lows and then start coming back to the other side. Another reason why I was expecting a sweep here is because look at how we dropped into that liquidity. Look at how we dropped into that liquidity. I told you guys, when price is really bearish, it doesn't typically move like that. It's not going to make this staggered move into the target. So that's what I mean by price leaves you clues that can help you predict the next direction. So yes, I do believe we're going to run these lows, yes. But because of how we got there, I expected it to not, I didn't expect it to be long-lived. I expected it to be a short-lived drop and then get right back to the upside and take that out. So they engineered on the way down, correct? All right, cool. Yep, and it's all good iPhone. I think learning about liquidity in these classes will really help you with that, and order flow as well. So here we are. I'm in this trade. I'm holding it as long as my PD rates hold right now. And this, actually, let me just take my stop loss. Hold on. Drag this down. Right now in this trade, my stop would initially, when we rejected this fair value gap, it would have been right there. Now that we actually ran those lows, my stop is right here. Let's see what happens. All right, cool. I'll probably move it down to about right there in this specific case. All right, now that we got that, I'll probably move it to right there. And let's see. Things are good so far. Things look good. Perfect. My stop is right here for surely. I already know we're going to get stopped out. I already know at this point we're probably going to get stopped out. And it's based on price right here, right? Look, we rejected this fair value gap and we made an expansive candle. I would like to see another fair value gap form. So I want the next candle to open up and then drop again so I could draw a fair value gap right here, right? So when I see price eat that entire imbalance back up, right, that's not a good sign for me. And so that's why in real life, I placed my stop right here and I was like, all right, this trade is over with. I already know I'm probably cooked. And then, yeah, I was out of there, you know? And that's that. And then, you know, price makes its way to the upside and consolidates and this, that, and the third. And because of that, right? Because of that, guys, I actually tried to, like up front, I went to a different account. I tried to play the upside. And at first things was going well, but I ended up taking a loss. And I wanted to teach a lesson about that loss right quick. So like, because I know we're ready to make a retracement, I know we're coming back into this imbalance next, right? So once again, I got out right here, okay? I know that the next destination is going to be the blue. I know that already. I'm not even questioning about that. Okay, but please understand, clearly, we were really bearish at the moment. So right now, this intraday is seen as counter trend trading, intraday. And one thing I want to make clear for y'all is if you're going to trade the counter trend, once again, I'm talking intraday, not higher time frame counter trend, but intraday, it's like, we've been super bearish. And so this is the first type of reversal we're going to see back to the upside. It's not always a smooth journey. And so for me, on a different account, I had got in, where did I get in at? Once I realized it was like, once I really believed in the move up, hold up. Let me just see some. I want to be accurate here. I think this is where I tried to go long. Yes, this is where I tried to go long. And because I had a fair value gap finally to protect. So any trade I get into, I need to see a fair value gap to give me some protection. So I went long here once we made one. Stop loss under the blue area. Okay. I was targeting the blue on top. So let me show y'all this. Let me show y'all this trade so y'all can see like logic here. Okay. So what do I need? Need the long tool, long position. If I'm getting it right here. And by the way, even though like what I'm doing is I'm going to go with lower sizing, by the way. I want to make that clear. I made money on the main move. It's also Juneteenth. So don't get me wrong. Even though I'm taking a loss on this trade here, the size that I'm taking a loss with is lower than the size that I initially took the win with, by the way. But anyways, so this trade makes sense to me. I have a fair value gap to protect myself with. That's what my stop loss is based on. And I'm targeting the blue area. And to be honest with you, I don't think this blue area is going to send us back to new lows. So I'm targeting blue, yes, but I'm only going to sell it if I have a reason to, okay? So when you see how this play out now, things going well, okay? and we get real close, you know. And I really was bent on price going to the blue, even though I'm noticing the movement, right? Like, look at the movement on the way there. What did I say? When price moves like this, always be suspect, because they're gonna take that area out. Okay, so I noticed the movement. Don't get me wrong, y'all. I'm like, dang, why we moving like this? I know they're gonna sweep that area. Which they did. But I was hoping that, like, hey, even if they sweep that area, my stop loss will hold, because they're gonna sweep it into the fair value gap. You know, I thought they was gonna sweep it into the fair value gap and then go higher, but nope, they went under the fair value gap, stopped me out. And so I took a loss on this trade. You know, so I get some money back right there, took a loss on that trade. It really just consolidated, and that's why I say, man, the counter trend direction after we met an objective already, right? After we met an objective already, the counter trend direction is just always a risky trade. Like, it's just always a risky trade. So you have to be careful. And that's why if you're gonna trade that, hopefully you guys can hear me properly. If you're gonna trade that, cause I saw something coming about my internet connection. If you're gonna trade that, I do hope that you go with lower size. Don't go with your main size. If you typically size 5 contracts, size 2 on a counter trend, size 2. You feel me? If you're gonna really trade that, okay. So smooth. All right, so I have even better demonstration for y'all next. Have you guys picked anything up so far? Like, anything? Are y'all messing with the class so far? I got a better demonstration for you though. While I pull that up, hopefully y'all getting some out of it so far. Anything? Appreciate you, Alex. Love to hear that, Danielle. Real life, love to hear that. And so let me go to maybe like right here-ish. 7, let's go 8. That. Do you have an Instagram? Yes, I do. It's Bagtalk Terrell. Terrell is spelled Tyrell. So yeah, Bagtalk Terrell. The gem about trading through the target was important for me. Yeah, Michael, bro, that is a major. I'm telling you, like, the thing is, it depends what you base your targets on. For me, my targets are often based on liquidity. The point of liquidity is not to make equal lows or highs. It's literally to go through it, right? Like, if I'm targeting liquidity, I want to go through it. So that's why what I learned is, when we hit liquidity targets, what areas should hold after we hit that. That's what I teach my mentees. Hey, after we hit the liquidity, what areas do you need to hold in order to determine whether price will continue or not? And if that area that you need to hold for the continuation does not hold, guess what? There will not be no continuation. And you're probably looking at a sweep. And so you could trade the other side if you want to, but I'm just saying, like, so that's why I'm able to usually, like, people kind of look at me as a person that's really able to hold trades really well. That's like a specialty of mine, because what I do to hold trades is, it's me knowing what areas will be maintained while this trend is continuing. And when those areas are not maintained, guess what? The trend is not continuing. You feel me? So yeah. And yeah, I got you. I'm gonna release the chart debate real soon. Hi, I was a little late to class. Did we go over the answer? No, I didn't go to the chart debate yet. I highly recommend, if you haven't already, join the free Discord, bro. Route updates like this on a day-to-day basis. Tap in. I appreciate you, Seth. Real talk. Definitely join, because I do update on a daily. So here we are. So this is, I'm gonna need ES for this one. I'm gonna need ES. ES is the S&P 500. I'm gonna need ES on this one. So I like this demonstration. This is gonna be good for us. I'm on trading view be janky sometimes, bro. Swear. That's 8, 6, 7, 8. Oh yeah, by the way, low key, we did an overnight trade in a mentorship on this. Like, once we saw this rally come in, I gave a call out to the mentees, and yeah, everybody should have been able to make $1,500 on that call out off the rip, just trading into these highs. This had to do with, it's like the if then, like, not even if then statements, bro. I told y'all what I say. Based on how we dropped into those equal lows, I knew we would come back for that, right? I knew we would come back for that. And I expect it to be a pretty straight movement. I'm not expecting a staggered move like that. Like I'm expecting it to be pretty one directional. Now it consolidated overnight. It went sideways, yes, but it never really went backwards. It actually held the area I wanted it to hold, which was this 5-minute fair value gap right here. I really wanted this one to hold for me to remain confident in this trade, and it held the whole night, literally. It held the whole night perfectly. I was like, okay, cool. So it was lit, and everybody woke up to like $1,500 ideally if they took the trade. So that was good. But anyways, all right, here we are. So Wednesday's highs is ahead. You can see after we swept the equal lows, right? That was a trade we traded to the downside on Juneteenth. There was no continuation. We had the choppy move. I think a lot of us should be looking at Wednesday's highs as a target. And NASDAQ and the S&P 500 tend to look pretty similar. I mean, look at the visuals of their charts. Don't they look like twins? Yeah, they look like twins for a reason, people. And so based on the fact that these two charts tend to be twinning a lot, you want to make sure that they're doing the same thing at the same time. So if NASDAQ is going to go for Wednesday's highs, you want to see the S&P 500 go for Wednesday's highs as well. Okay, cool. Keep that in mind. Keep that in mind. So I'm eyeing that. I'm eyeing that. Let's go to the 5-ski. Let's get it to market open right quick. I took some L's at market open. I'm going to show y'all that too. All right, that's 930. Boom. All right. That's 929. All right, cool. So let's focus on the NASDAQ for a second. At market open, I took L's trying to trade in this little section. Price is moving pretty fast, but it was like this little section of consolidation. Y'all about to witness it right here. This little section, you see this long candle, the red candle, the green candle, the red candle. This little section gave me a little bit of drawdown on my account. So I entered the day, the opening part of the day with some drawdown. I'm like, dang, down like, a few $100s on this or whatever. I'm like, dang. Trading, it kind of messed me up a little bit with how they were taking Wednesday's highs. It was kind of frustrating. For example, the reason why I took an L is because I wanted to see, for example, price hold the upper half of this fair value gap, right? Price held the fair value gap, yes. It didn't hold the upper half, 1, and 2, we wicked way under it. And so I think I remember trying to go short here as well and targeting lower, but then we ended up flashing back up and holding the area. And then we went back down. And so, and then we went up again, and then we went down. Like, hold on. So I had a tricky style. I'm like, okay, chill. Wait for a A+ setup, because it's not an A+ setup. You feel me? It's when you chasing. This is when you kind of like I said, we made money overnight. We've been moving to the other side. I see, we got more highs above us. Like things look good. I'm chasing right now. You feel me? Not a good thing. So now I'm chilling. I'm like, all right, bro, wait for an A+ setup. What's an A+ setup? Well, every time we get to a liquidity pool, such as Wednesday's highs, for example, you want to look at the NASDAQ and the S&P both, okay? Because one of the most A+ setups you could take is what we call an SMT. It is an SMT, a smart money technique, which is when the NASDAQ and the SP 500 are doing different things at the same area. So what do you notice? Hold on, what is this? 936. Shouldn't ES be on the same page? Why is ES not moving? Hold on. All right, whatever. Let's go to the 5-minute. Let's go to the 1 minute. Let's go to 1 minute. So look, they're both on the 1 minute. So what do you notice? ES did not run Wednesday's highs at this moment, but NASDAQ did. I'm telling y'all, when y'all see that happen, your antennas need to go up. You need to be on high alert. Like, hold up, important area, SMT. Oh shoot, what do you look for after the SMT, y'all? What do you look for after you notice a potential SMT? What tells you you should potentially get involved now? What do you look for? Thank you, Tiff. Right away. Yup. Michael as well. That's what's up. Y'all been paying attention. Good stuff. A fair value gap. So first thing I noticed was the SMT, but I did not go short yet because maybe ES is just taking its sweet time, right? Maybe it's just taking its sweet time and it's going to go there. For me to believe in this SMT, I would like to see a fair value gap on both tickers. Where? because some of y'all probably like, do you mean a bullish fair value gap? Do you mean a bearish one? I'm talking about a bearish fair value gap right now. Okay, because right now Nasdaq ran and ES didn't. So ES, if ES is gonna fall short, it needs to fall short with a fair value gap, and Nasdaq needs to basically sweep this and show me a fair value gap on the sweep. Okay, so that's what I'm looking for right now. Okay, let's see if we get that. Come on. So far we consolidating, right? ES is starting to come up. You can see on the right side, ES is starting to come up. So you might think like, okay, see, that's why you don't be so eager. Don't be so eager in that SMC. You gotta chill. We might still push higher. You gotta chill. See, we still push it higher. Wednesday's highs in sight. We should definitely run it now. We made a higher high. We should definitely run it now, right? I think so. Let's see it. Let's see it. Let's see it. Come on. Come on, TradingView, man. TradingView killing me. We are getting close. Let's speed this up a little bit. All right, cool. So now we break down with a fair value gap right there. When I noticed that is where I went short, I just had to rewind it a little bit. So when I seen this fair value gap right here, this is where I go short. Now, if I go short here, where's my stop? For me, my stop is on top of the fair value gap that we're getting in for. That's all it is. It's on top of the fair value gap. If you're not familiar with fair value gaps, what I'm doing is highlighting the middle area where the first and third candle don't overlap. Okay, it takes 3 candles to make a fair value gap, right? So I'm highlighting the middle area where the first, the green one, and the third candle, that small red one, do not overlap each other. Just this body area. And I put my stop loss typically, like I give it some room above the fair value gap because price could wick. Okay. And so as long as this holds, I'm holding. And I feel like it's a low risk play. I'm cool with the results. Because it's an hourly SMT, meaning Wednesday's highs, I see that as like an hourly target. I expect a big move to the downside. Another reason I expect a big move to the downside is, I'm gonna go to 5 minute for a second. What did I tell y'all? Yo, I'm telling you, hold up. It's so much I'm gonna say at one time. Listen. People, stop just looking at one time frame when you trade. You feel me? Anybody that's been on my live trades knows I always have 2 screens up in front of y'all, and then I have 2 more screens on my monitor. I'm constantly scanning time frames. So yes, you guys see me take 15-second entries, 15-second exits. Don't ever get it twisted. I am a multi-time frame trader. I don't like people ask me, yo, Rel, what's your favorite time frame? I don't have a favorite time frame. I just trade. When you trade, you need to know what every time frame is doing. You need to have a cohesive story. So for me, I understand that based on this SMT and us losing a very important area, which I'm gonna show you in a second, we're gonna make a move lower. And when I look on the 5 minute, I'm like, there's nothing here that's stopping us. Nothing. This is the choppy move up I talk about. And when we have those choppy moves up, we tend to have straight line moves down. You feel me? So that's how I got in from the top on Friday. And my initial target was right here. That's my initial target. Initial. It really could get worse. I just knew, yo, this is like if the I remember on Friday, I was like, yo, if the Bulls don't hold this, bro, we're dead for real. So let's see, you know, what happened. At least the first trade, the first baby target is right there. All right, so the area I need us to hold for NASDAQ, for me to remain bullish, needed to be this fair value gap right here on the 1 minute. That needed to hold. It really did in context. Once again, it's too layered for me to break down why I say that one versus this one, you know, but just understand, like, with some deeper learning, you guys will start to be able to snipe like that and know the exact point of reversal based on areas that you know should not get invalidated. That area should not get invalidated in context, because under that, it's just gonna get so ugly for NASDAQ. And on the S&P 500, they needed to hold. Either one of these imbalances would be valid to me. It needed to hold that. So we invalidated the blue rectangle while simultaneously making a bearish fair value gap on ES as well. So when I seen that on ES and I seen NASDAQ do the same thing, and I look below me and I'm like, oh nah, it get real ugly under here. It's nothing to stop price. That's how you catch a banger play right there. So this to me was an A+ setup. This was like literally just a gorgeous setup right here. So let's go ahead and see how it play out. Let's see how it play out, and let's try to move stop losses and stuff. Like initially, it's right here. As it drops, I think it was a pretty smooth drop though. Really wasn't really much to like base your stop on too much. Like, you know, as it's going, I could have put it right here. Now, I mean, at this point too, I wouldn't want to see it come back to that area. Not before hitting these lows. I would want it to reject this imbalance that it's currently at. Personally, in this context, I wanted to reject that little imbalance right there and continue lower, which it is currently doing. I'm on TradingView, which is currently doing. There we go. I told you there's nothing that should stop us from coming to the blue area. So even though price is a little bit choppy on the right side, I'm expecting the price to end up going to the blue. And now, yeah, this looks good. This imbalance is important right here. I would want price to reject this. If we're going to remain bearish, actually, I would slide my stop right here. If we're going to remain bearish, we need to reject that. I might even go on top of that right there. All right. And there we go. Boom. Now, I'm in this trade. I'm like, okay, first TP was supposed to technically be the blue area, right? But do y'all see how he plummeted through it? Like, they didn't even scam me. Like, they didn't even at least try to like retrace a little bit. I'm like, oh shoot, all right. And this is what I mean, where I personally, this is my preference, I don't set limit orders to take profits. Because imagine I had a limit order right here waiting. I would have got out the trade. Like, yes, I would have made money, but I ain't gonna front. Like, I would have missed out on a lot more money, you know? So that's why, to me, I monitor my trades and I just trail my stops with areas that shouldn't get invalidated. That's it. Trailing it. I'm trailing. I'm still good. You feel what I'm saying? And now I'm thinking the same thing. Look at this area. I mean, this is everything I talk about in these classes. This is everything I talk about in these classes. I already know what we're doing. There's a 15-minute bullish fair value gap, a very large imbalance on the 15-minute that exists right here. So this little consolidation from overnight, I know we're about to take that out and we're coming into this imbalance. So once again, constantly scanning time frames is important as you hold trades or as you pick direction. I understand that, okay, this SMT is playing out from the hourly time frame, therefore a bigger move is coming. Okay, cool. Well, as we make this move down, dang, if we're not going to bounce on this imbalance, I have an if-then statement. With that if-then statement, then I know the next place we could potentially bounce is this imbalance. Okay, cool. So I mark it out. The imbalance begins at this yellow line. That's where it starts at. That's where this imbalance starts at, the yellow line. And so I'll target that for now until further notice. All right, cool. I have a question. I have a question for y'all. Food for thought. Where, hold this up for a second. Where would you feel like you're wrong? I'm gonna put numbers here. Would you feel like you're wrong with number 1 getting invalidated or number 2? These are fair value gaps. Number 1's fair value gap getting invalidated, or number 2? Which one? Where would you feel like you're wrong? Number 1 or number 2? Where would you feel like you're wrong? Okay. I see a lot of 1s in the chat so far. It's interesting to see. I like this. Yo, I like this a lot. This is mad interesting to me. I'm noticing all my mentees that's been with me for a while. I got some newer mentees. I've seen a couple of them put 1s. All my mentees that's been with me for a while, they all said 2. That's actually mad interesting. That's funny. Okay. Interesting. All right. Let's mark out both these fair value gaps. I see everybody's answer though. Majority of people in here said 1. Really, the only 2s in the chat for the most part was people that's been with me for like my actual mentees that's in my mentorship. They said the fair value gap on top. So for them, they probably place a stop like right here-ish. And let's just see, you know, which fair value gap is gonna hold. Mentees, y'all know what y'all talking about? Let's find out, mentees. So people in the free community mainly, right? If price sees over this fair value gap, they're gonna cut the trade because they basically said, yo, if we invalidate the first fair value gap, we're bullish. That's what they're telling me. So let's see. All right, you guys are out of the trade. Now, let's find out if my phase 2 mentees holding this trade, are they holding the bag? Are they holding the bag? Let's find out. Or are they correct? Banger, banger, yeah. Yeah, see what I'm talking about? We love that. We love that. We love that. It's a beautiful thing. Good stuff. Good stuff, my people. Good stuff, man. TV. Y'all doing y'all thing. Y'all paying attention to detail. There's a reason why this fair value gap is more important than the one below it. It's a reason. That's a beautiful thing. It's a beautiful thing. Good stuff, y'all. Y'all doing y'all thing. But I know that's a fact. Priscilla said too. Shout out the some free people in here said too. Y'all doing y'all thing. But it definitely was overwhelmingly ones in the chat, and then the only twos I was noticing, I'm like, oh, I know that name, I know that name, I know that name. Like it was all my experience mentees. So that was good to see. I like that. Jay says, so in this circumstance, the first gap tends to be respected more than the second on average. So is that a question? And by first one, do you mean the one on top or do you mean the one on bottom? You know, because that's like a perspective word. Do you mean like first? Okay, the one on top. In this specific scenario, not every scenario. So not every time you see two fair value gaps in a row, we want to go to the top one. It's not every scenario. It's this specific scenario. Okay. Yeah, it's this specific. So this is what I'm saying with the nuance. And that's why I say for me to have a teaching on why I choose this fair value gap versus this one, it's too many layers. That's why I made my mentorship. So we can have 4 months of learning so you get the whole understanding all together. Because imagine I said here today, I was like, hey guys, every time you see two fair value gaps, I want y'all to choose the one on top. That's wrong. That's bad teaching. Because that's not true. It's not always the one on top. It depends on the situation. In this situation, as you can see from my mentees answering, they know to choose the one on top for this situation. But that's not every situation. Don't get it twisted. You know, so that's why I'm like, it takes a lot of teaching ultimately, you know, but I try to do my best as much as I could for free. And of course, you know, within the allotted time, I try not to like stretch class too long. But yeah, so I end up, I think Friday, I'm still in this trade until we invalidate this fair value gap. I feel, because I think trading views is moving kind of slow. It's kind of annoying me. This fair value gap right here, I want to see a hold. I want to see a hold. If it doesn't hold, I'm good on the trade. I'm good on this trade. Okay, mind you, we're inside of that big 15-minute imbalance. And so you'll see here me exit. And I'm just going to do this because trading view is acting too slow for me right now. So we're just going to look at it. All right, so here we go. You see, we have, once it got invalidated, you see what the price did, flash all the way up. So this is what I mean by like having sniper exits. Sniper exits. Because once again, it's if-then statements. If we were still bearish, we would not have invalidated this. And so if you're new to fair value gaps, you're like, man, like, yo, yeah, you see how clutch they are? Like, no indicator could tell you to go bullish right here. There's no indicator that could tell you that. There are no indicators that quick. You feel what I'm saying? Like, I'm on the 1 minute. Let's not get it twisted. I'm on the 1 minute, and I really could see that reversal happening on the 15 if I really try. So I'm just simply saying, like, that's why if you learn the candles at a deeper level, see, like, for example, I already know on the 15-second, we should not invalidate the lower half of that. So if we were going to be bearish, we should have respected the lower half of this. All right, once we come to the upper half, I'm already out of there. Like, I already know we about to go bullish. What does price do? It makes a down move into what? A bullish fair value gap. My bad. Freaking magnitude. A bullish fair value gap right there. Makes a move into that before it goes higher. So once it came to that top side of the bearish one, it made one more move into the bullish one before it popped out of it. How do you know to take the bullish one? How do you know to enter on this bullish one? Well, once it crossed over this, right? Once it crossed over that, we're bullish. Therefore, since we're bullish, I trust bullish fair value gaps. Yeah, facts, indeed. Right. Copy. So what are we bullish into? Let's find that out. And so, yeah, by the way, I caught that whole downside. Friday was obviously, a lot of you guys saw, like I was able to make some solid money on Friday, whatever. Was able to catch this downside. That's good bread. And then now, last but not least, on the demonstration side of class, let's talk this liquid section right here. So we make the move up after we exited at the bottom. That's beautiful, right? And this imbalance becomes extremely important for telling me what's coming next in the market. Because if this imbalance does not hold, I am fully bullish. Like if this doesn't hold, we're bullish, bro. So I need this to hold. So something I told the mentees at this time, I said, yo, we could consolidate here between this BISI, my fault. Some of y'all don't know that terminology. I'm gonna just label it. Look, bullish fair value gap right there, and then let's label this one so everybody's on the same page. Bearish fair value gap. All right, cool. There's a question in the chat that says, do you use a fib showing you the optimal trade entry for fair value gap entries or double fair value gaps? It's situational on when I'm gonna use the fib for OTE or discount premium. You don't always want price to come to a discount or a premium, and so this kind of goes into the nuance thing that I talked about, where it's like every time price is retracing, we don't always want a premium retracement or a discount retracement. That's not always the case. A lot of times people, like, let's say for example's sake, if price were to come into this area up here, which is a premium of this price leg, and give me a second, let me slow down for beginners in the room. All right, let me slow down for beginners. I know I'm using some vocab and I'm losing some people. I got y'all. You can see I have different experience levels in the same room, right? So it's kind of tough to navigate sometimes. But okay, what you can do is when you can measure price legs. So look at this bearish price leg. You can measure this with your Fibonacci retracement tool. I could take the Fibonacci retracement tool, I could start it at the top, and then I could take it all the way through to the bottom. Okay, and the upper half of that measurement, which is up here, right? That's what we call a premium. And there's a lot of people on YouTube who will say, hey, if you want to take puts or you want to take sells, wait for price to come to a premium for your sells. Once price comes into premium, I want you to take shorts and target the lows. That's what they're going to tell you on YouTube. And what I'm trying to say is that is irresponsible teaching to me, because it's situational. You don't always want premium in like, if we're bearish, we don't always need to come to a premium. So for example, in this context, if I were to watch price at this point on Friday, if I saw price come to this premium, I am not shorting that, bro. I am not shorting that. I am 100% bullish into those highs. I'm not shorting based on that. So I don't want that. So if I'm gonna remain bearish on NASDAQ, like I said, it needed to hold this in real life. It needed to hold this if we're still bearish. If it came up here, I already know we bullish. That's a whole reversal. So there's people out here that's about to short this. Meanwhile, price is about to just trade straight to the upside. So you got to be careful. And those nuances in this strategy is what throws off so many smart money traders, and why people say on threads and on Instagram and on Twitter, like, oh my gosh, like fair value gaps don't work and smart money constants doesn't work. It's like, no, you learned it incorrectly. It's okay. It's all right. There's a lot of bad teachers out there, but if you learn it correctly, there's nothing better than this, period. There's nothing better than this at all. The precision is undefeated. The precision is like unmatched. So for example, because I know we're only bearish if we hold this area, but I also know there's a bullish PD rate right here. I even said to my mentees at this time, in the chat, I had said, you guys know it's a dangerous area. We could consolidate in between here before making our next move. And I told them I think the next move is to the downside, because I was still bearish. Okay, so here, right, expect consolidation. Why? Because we're in between two valid PD rates. This is a valid bullish fair value gap, and this is a valid bearish fair value gap. That's where consolidation tends to happen. So yes, you can predict chop before it happens. That's one of the ways we could do that. That's one of the ways we could do that. So let's see what transpired here. Here we go. All right, so price comes into it. Let's see if it plummets through it or if it bounces back. And then they start playing what? Freaking ping pong. They start playing ping pong. This is where consolidation happens, and a lot of people start blowing accounts in this little section. This is where consolidation happens, right there. All right, so boom, copy. So where we at? And think about it. You will be bearish at this exact moment, right? You would probably think, like, okay, the bearish one is winning, but hold up. Dang, trading view, man, slow. All right, so you see, then it starts popping back up, so you can see the freaking headache that a person will go through in here. I tried a couple shorts in here, trying to short the tippy top. I never took a loss inside of this because I always shorted the tops. Like, I think I had shorted this sweep, one of these sweeps, and then my stops is break even. Boom, stops out break even. I think I shorted the next sweep. Boom, stops out break even. I know I shorted this one. I was up a couple thousand. I was up good here. I'm like, all right, this is the one. And then they came back up. I'm like, oh my gosh. I'm like, you know what? It's whatever. And I tried one last time, and obviously that's the one that went. For people who are in the free community, y'all seen this trade here that I already had posted. But this is the trade that I took on this. So I got in. We're about to look at it right now. But this is, and I'm gonna show you guys why I took this entry right now. So why did I catch this entry for this seller? The reason that I took this entry is because, for me, like I said, I understand that we are consolidating between these two PD rays, but the risk to reward is on the side of the bears for me if we can get to the extreme side of this fair value gap. What do I mean by the extreme side of it? Well, if I believe that we're gonna hold this fair value gap and we come to the highest part of it, it doesn't hurt to just try the shorts out. It's just risk to reward. Like, so the first thing I did was determine, okay, based on a higher time frame, I think price is going to come into this gray area. That was my thought. I thought the price was going to come into this based on a higher time frame context. So remember, I'm always scanning time frame. Cool. So if it's going to get there, I trust bearish fair value gaps. Why? Because we have not gotten there yet. So until we get there, I trust bearish fair value gaps. Understand? All right, cool. So when we come up in here, we flash above these internal highs. Yes, I'm on the 15-second. This is the time frame that I shorted it on. When I see us flash above, I start shorting it. I got in my first position at 5 micros. I scale in another 5. I'm at 10, and then I scale in another 10 once price gives me a fair value gap. Mentees, I know I went over with this. I went over the scaling method with y'all recently, mentees, but that's how I was able to get 20 in with low risk. Because by the time I had 20 in, I was able to go break even immediately, and I let the rest fly. So now I'm really riding this with the equivalent of 2 minis. And yes, I'm talking to futures traders for a second with that. But anyways, you know, we make this move down, and you know, this trade is well over an 100-point trade, all the way to the downside into these lows. And then remember, I have a target, and this is the last part of the demonstration. I have a target of the gray area. I also, of course, want us to run the previous lows, of course. So let's see how you might trade that if price is falling short. Okay, so hold up. Okay, let's see if we can run this. We need it. Okay, boom. All right, when we run this right now, I really do not want to see price come back to right here. I don't want to see price come back to right there. Okay, if I see that, I already know I'm probably gonna be wrong. Okay, so let's see what it do. Okay, perfect. We got a fair value gap. Thank God. Okay, fair value. So this is me in real life. I'm in these shorts. Y'all seen the trade. I'm still holding. I got nothing to sell for. Everything good. But this fair value gap has to hold if we're gonna make it to the gray. If we're gonna make it to this gray, the fair value gap has to hold. Okay, so when you watch this happen now, where it does not hold, it held at first, right? It was good, but then, okay, boom, stop me out in profit, copy. It stopped me out of profit. Now let's see. Once again, an indicator could never get you out that early. An algo could never get you out that early. But That was the low of the day. And then price flashed up, and then it started consolidating, and it consolidated here for the rest of the day. That was the low of the day. So I got out right at the low of the day. I showed it up top, got out at the lows. That's precision. And all of this is with naked candles. Y'all notice I didn't pull a one indicator here, one algo. I ain't pulling none of that. You feel me? And that's how I got out at the very bottom. That's the logic. Just knowing areas that shouldn't get invalidated. And that was literally the low of the day right there. And never, I wanted the gray, but I don't marry destinations. You feel me? I just know if we were going to go to the gray, that fair value gap would have held. And once it didn't hold, I was like, I bet we're not going to the gray. It's simple. We not, at least we're not going there right now. So I'm gonna take my profits to get up out of there. You know what I'm saying? And then that's that. All right, that's that. And that's how I know there's like, because there's so much layers to what I do, I can't go over every single detail of why I choose this or what versus that. But I try to give you guys overviews to the they just like give you an overview of how I trade, and maybe you could pick up some gems along the way. Even just the approach to it, even things as far as just risk to reward, even things as far as when to kind of stay out. Like, okay, this area is probably gonna chop, or even like remember I told you guys, for example, once we lost this area, I knew we were gonna come to these lows, but based on the fact that it was against the higher time frame and it's in the middle of the range, I didn't want to trade the middle part. So I'm cash in that area. You know, when did I get involved? When we were actually making a move towards that target. That's when I got involved. So even something like that is something everybody could take part in, or learn from. Like, I think a lot of people want to learn the secrets I know about fair value gaps and stuff. And like, I'm gonna be real, like I definitely say that for my mentorship. I'm not gonna go too in detail because first of all, it would take too long. Second of all, I gotta respect the people that's in my mentorship, you feel me? As well as me. That's my IP. I have a lot of discoveries that are from my own brain. A lot of what I do is from my own brain. I never learned it nowhere else. Not everything, but a lot of what I do. Some of my most important things is from my brain. And that's why it's like, I just suggest that, you know, you guys get involved if you could. All right. So I appreciate you, Alice. I'm glad you think so. Definitely was a lot so far. We get into the next segment in class. Let me read these last couple comments, and then I'm gonna get to the next segment, which is the chart debate. I know a lot of people waiting on that, so I'm gonna get there. So it says, I'm new to fair value gaps, typically trade volume spikes and key levels. This is great info so I can hold trades longer. I definitely agree. If you incorporate fair value gaps with the correct teaching, it will easily help you hold trades longer. And I honestly don't think you'll be even using volume anymore, because fair value gaps show you volume. It shows you real intention. So you don't even need volume anymore. And key levels, when you learn liquidity, you probably won't even use key levels, to be honest with you. But I understand it's a process and everything. Danielle said that's enough for me today. I need my brain to process all this source. I definitely understand. Um, Pat said he's the real deal. The mentorship was well worth it. I appreciate you, Pat. Hope you're doing well. You the real deal as well. Real deal. Jay said, I'm a scalper, so I used to rely on divergences in volume. Jay, with what I'm talking about, you could scalp, you could swing trade, you could day trade. I promise you, I could do all the above really well. Even if you look at some of the entries and exits that I've shown here in the demonstration, that like I didn't use any, like there's nothing that can get you out that quick, really. Like no indicator and nothing like that will show you that. You know what I mean? Um, I appreciate you, Jay. I'm glad you feel that way. And there's just so much that I'm not saying. That's what, like, yo, sometimes in these classes, I be itching to reveal like mentorship stuff, but I just have to respect, of course, my mentorship, my mentees, myself, you know. But I know that a lot of people get a lot of value out of the free stuff regardless, but still, there's so much I'm not saying, y'all. There's so much I'm not saying. Y'all have no clue, bro. Y'all have no clue. And I can't wait for the people that end up joining us this fall. I can't wait to share with y'all, because mentees know I overshare. I I share too much with them. They sick of me. I be teaching them too freaking much. When I've been self-taught for 9 years, YouTube and execution, my mind has given me confirmation on my trading style. I'm looking to evolve though. Definitely, there's always room to grow. Even if it's just you know, think about it like a basketball player. Like LeBron could learn a crossover from Kyrie. It don't mean he changing his whole game, but he might just incorporate the way that Kyrie sells his crossover. It's okay. You could always implement more. You know, that's being a student of the game. I'm always willing to learn as well. I don't really learn from anybody right now, but I'm always willing to. All I appreciate you, bro. Real talk, I mean a lot. And last but not least, the free session is a vibe. I'm glad you think so. I try to make it as fruitful as possible. Fendi, it's a fact. Nikita said, and you have credentials, don't forget the degrees. I thank you, Nikita. She's referring to the fact that, for those who don't know, I do have my master's in education. I used to teach math at a high school. And so teaching is a passion of mine. I'm also a skill teacher because literally, like, I do have a whole degree in teaching. I know how to effectively teach people. That's what I do. I love to teach. So that's what she's referring to. So I appreciate you. Definitely. And that's also why my mentorship is structured like that. Why we have homeworks and tests and quizzes and midterms and finals and slides and like, because that's how I know how to teach. So I teach trading. So that's why I call it trade school. I teach trading, so it's trade school. We back at trade school with it. How long does it take you to know that fair value gap and liquidity tell price action better than other techniques? When I seen the precision behind this strategy, when I seen the precision, that's what sold me. Like, yeah, nah, I gotta learn this for real. Like, this precision is crazy. I'm like, yo, how are you predicting the market? It's like, now I predict the market better than anybody that I know. Yeah, I swear, bro. Yeah, I hope you guys continue to tap in. But let's move on real quick for time purposes, and I'll get back to the chat after the recording is over. So quickly, chart debate, y'all, chart debate. Okay, this week, this is a chart debate that was put out. Which arrow is most likely to play out? That's what we said. You can see we have arrow 1 going to the upside. You got arrow 2, arrow 3 in the gap. Arrow 4 is in a premium, right? So this is funny because this goes into the thing that came up earlier. Like, is this a scenario where you want price going to a premium, meaning the upper half of that price leg? Do you want it going to a premium before going back to the lows, right? Do you want to go into the gap before going back to the lows? Or do you just want to use in this little fair value gap right here, going to the lows, or do you think we about to have a whole reversal? That's really what I'm asking you. And I don't put time frames here, I don't put tickers here because it doesn't matter, because price is fractal and every ticker is the same. That's why I mainly trade futures, yes, but I do trade options and I trade Forex. I trade all three markets very well, profitably, because at the end of the day, every ticker is the same thing. All these candles are the same on every time frame. So when you learn certain things, it opens your world up and you have a lot of different money making opportunities. Q said you could go to law school, med school, or trading school. One has the potential to make you more than the other two. That's a fact. That's a whole fact right there. So for the free community, arrow number 3 is the most popular arrow right now. They saying price is gonna come back to the gap before dropping to the lows. So I even got some free community people in the chat right now doubling down. Yo, it's arrow number 3. I love the confidence. Let's see it. Let's see what the mentees think. Let's see what those good old mentees think. What y'all talking about, mentees? Wow. Okay. Mentees. 39 mentees answered, and 33 of my mentees are choosing arrow number 2. So what I tend to notice with my mentees, after I go through certain lessons where they learn how to predict price action, once I teach them how to predict price action, my chart debates start becoming very one-sided. Like, they all agree collectively on one thing. Why? Because they're all learning from the same teacher. So I just hope y'all don't embarrass me right now, mentees. I hope that you guys don't embarrass me, because otherwise, don't even come to class tomorrow because I'm gonna just get mad again. So is it arrow 2 or is it arrow 3? Let's find out. Mentees versus the free people. What we doing? Let me pull up this. Matter of fact, it's time for a commercial break. I'll tell you something. So, everybody, right now I'm drinking cran apple. Cran apple is a combination of cranberry and apple juice. I know a lot of y'all know me for drinking apple juice. Today I thought I'd switch up and throw some cranberry there. And I think that's like it's a good thing to, it's a good lesson to have, right? Because in life, you want to always add to your bag. So yes, I'm typically an apple juice type of fella. But when I throw the cranberry on there, it shows an intention on growth. Okay, and it's always good to grow in life. You know, you want to make sure that you're studying, and treat people kind. Okay, treat people right, and go through your life with dignity and all the above. So cran apple, everybody, drink up. All right, I know my fault. My bad. Am I stolen? My fault. My fault. Am I stolen? My bad. Okay, so y'all want the answer, I guess. I might as well see. Monique is here. You know what I'm saying? You a real one. Facts. We here. But that's cool. Let me show them the chart debate answer right quick. Mentee's about to. Nah, chill. Mentee's about to embarrass me right now, son. No, they not. No, they not. Arrow 2-1. Shout out to Mentees. Yo, y'all better have got that right, Mentees, because I was just talking about that scenario, why we use that fair value gap in Thursday's class, bruh. So I was like, if y'all didn't get that right, I'm like, y'all not listening. Cause we just talked about that signature. Good stuff though. And a shout out for the free people that pick Arrow 2 too. Arrow, there was some free people that had Arrow 2. I seen y'all. Oh, my fault. Not Thursday class, Monday class, my fault. Wednesday's class for the phase 2, I think I mentioned this as well. But where either way, I did talk about this in our recent class for surely. So shout out to Minty. I did that thing on that. Arrow 2 won that. And I I I can't get into, I'm not gonna lie, I'm not, it's a mentorship signature that I'm not gonna go in detail about. But what I will say is that don't think because you have a gap, we have to go fill that right away. And again, reiterating, don't think that we always need to come to premium before going lower. That's the YouTube type teaching that will get you killed in this market. I promise you, you need to be careful. I don't care if the views on the video is 788,000 views. I don't care, bro. Anybody can make a video, and if you market it right, it'll go viral. I don't care about none of that. There's a lot of incorrect teaching. That's why people trade smart money concepts wrong a lot of the time. They don't show level precision. They don't predict price action. They can't call it before it happens, right? They tell you a lot of hindsight teaching. Why? Because they don't understand it like they think they do. No shade on nobody, just being real. I'm telling you how to protect yourself because you that don't gotta learn from me. It's really okay. It's really okay. But I want you to also discern who you are learning from. If they're not predicting price action at a frequently accurate level, you need to be careful. If they can't tell you, like it's not even just me, my mentees just did it. My mentees just told you what's gonna happen before it happened, right? So clearly there's something to the knowledge. So I'm just saying, be careful with what you're consuming on YouTube because the strategy 100% works. It works, but most people don't know how to work it. As I like to say, a hammer is a great tool, but if you're using a hammer to screw in a light bulb, you think a hammer is all of a sudden a bad tool. Like, hold on, a hammer is a great tool, but you're using it incorrectly. Okay, that's what people is doing with smart money. They're using it all wrong and thinking the strategy is the issue. When it's like, no, you don't know the strategy like you think you know. You don't know like you think you do. You think you know fair value gaps, you don't. You think you know liquidity, you don't. You think you understand, I don't even use market structure, but you think you understand structure, you don't. The answer was arrow 2. Um, yeah, I got y'all. All right, cool. Let's move to the last part of class. I'm gonna fly through this part. Okay, so what we like to do anytime we enter a week is you want to know what's the best days to trade. So Monday we have PMI. All right. You got, first of all, there's a lot of geopolitical news, so I think that'll drive the market more than anything. But you do have my cousin, Jerome Powell, talking on Tuesday at 10 a.m. It says to the House Financial Service Committee. So I don't know, maybe just talking about housing. I'm not sure how much of an impact that'll have on the stock market, but just be weird. Jerome Powell is talking Tuesday at 10 a.m. It's also consumer confidence at 10 a.m. And then other than that, you got, GDP second revisions on Thursday. Maybe keep your eye on that. Friday is PCE. Friday should have some decent movement. PCE is a pretty important market event. It's another inflation gauge, so keep an eye on that. But yeah, I say in general, I think geopolitical news will drive the market more than anything this week. So I would mostly just keep your eye on what, that guy is doing up there. Y'all know who I'm talking about, or whatever. All right, so that's that. Now let's go ahead and get to the market predictions. Let's get to the market predictions here. So I'm gonna get off futures for a second. I'll be back. I'll be back on futures, but I'm gonna get off futures for a second. Let's go ahead and take our talents to DXY. Let's go to the dollar, um, and see what it's here for. All right. All right, on a dollar, it looks like they gapped up so far. You see, I have an alert here. Why? Because I think the dollar is gonna make a run to run out these equal highs. It's very clear on the 4 hour as well. this is too clean. So there's a reason my alert has been here. And yeah, I've been waiting on this. I know we had a quick move down, which could be kind of convincing, but I didn't really believe in that move down. I kept my alert here, and I'm waiting to see what the dollar wants to do after this. I think if the dollar, my fault. I want to see how it treats this imbalance here. I know we already used it, but I'm still eyeing this imbalance. Okay, over this imbalance, the dollar's gonna run these highs. Okay, but I need to see what the dollar does after it runs these highs. So it's very much in a patient time period when it comes to this ticker. I think that first of all, it's been in consolidation. We're in a very tricky area. But to me, I'm not going short unless we run these highs. I don't think, you know what I mean? I'm not going short. Meaning short on the dollar, short on the dollar. Of course, you really technically trade dollar pairs. So I think basically this ticker is going to push up in the short term. So let's see how that might affect dollar pairs. So that should send something like Euro USD, for example, down in the short term. Right now, they have a bullish open so far. Maybe they're just filling this gap and then they're going to trade right back to the downside. So I want to see if Euro USD could lose this BISI or not. See, bigger time frame, monthly vibes. Minor target is here on the monthly, but my real target is yellow line up top. Monthly vibes. I think we're using this BISI hit to take us all the way up here. So I've been, for the euro, I'm bullish on it long term. It's just about sniping it. So when I look at this price leg, to be honest, the only thing that could send us bullish, in my opinion, really is this fair value gap. So it's tricky because I'm like, dang, I really want to use this fair value gap to take us higher because it matches up with my monthly draw, my monthly bias. But the dollar, which is supposed to be its inverse, right? The dollar has a move higher in it still. So basically what I'm trying to say is there's a chance we could invalidate this while the dollar goes to those highs. If you follow me, some of y'all just got lost with that. They're supposed to move opposite of each other. So if the dollar's moving higher, they should be moving lower. But my point is, I really wanted it to hold this. So it does leave me at a bit of a standstill. I'm going to keep my eye on this. I think another safe way to take it is maybe trading the breakout. Trading the breakout and stop losses based around fair value gaps that we make on the way to the breakout. So if we make a fair value gap on the way there, your stop loss could be based on that. If you don't want to try to snipe the bottom, you know, because the bottom does look pretty tricky. But no matter what, I do believe we're going to turn back around and head to the upside on the euro eventually, which also makes the dollar turn back to the downside eventually. That's why I'm looking for the dollar to potentially sweep or something of that nature. So keep that in mind. And it's really like similar sentiment across Forex. You know, British pound, like I ain't gonna front, like there's just not much to say that I haven't said recently. Like they have a weekly bullish fair value right here. I want to see price hold this one. I want weekly bodies to hold this on British pound. I think there's a great buying opportunity inside of this area on British pound. I ain't gonna lie. I think weekly bodies should hold this weekly fair value gap. So on your chart, you could draw this weekly bullish fair value gap, right? And I think a weekly body should hold that. But it's okay to wait for a breakout because it is a little bit tricky in the Forex market right now. I would stay away from this ticker. We got to the target, but I don't like how it's moving. I think it's going to chop here before it continues higher. On New Zealand dollar, USD CAD. Let's talk about this one. I think USD CAD is going to move into these lows. I still think it will. I had talked about price. I want to see price respect this daily bearish fair value gap though. So let's see if it could do that. Right now we're a smack inside of it. I would like to see it respect this so we can make that move lower. I don't really like shorting it if this doesn't work. And I don't think I'm bullish above it. Honestly, I don't think I'm bullish above it, but the only real bearish setup is using this to take you lower. That's it. That's the only real bearish setup. Other than that, there's a chance it could just literally consolidate some more. So it's this or nothing. That's the only setup I like on this ticker. And last but not least for Forex is USD Swiss franc. Yeah, I wouldn't trade inside of this. I would only trade breakouts to the downside. And if we get that breakout, notice the higher low, by the way. Yeah, that's the telltale sign. We're probably gonna make a move back down eventually. But anyways, if we get that breakout through these lows, I would take it to 0.78581. All right. So whenever it trades back down, when order flow flips back bearish, I would like to take this out and have continuation. All right. So that's Forex for you. Bitcoin. Bitcoin. All right. Last week I told you guys on Bitcoin that I believe we're gonna make a move back into this purple area. I would like to see price respect this blue area to take us there, and that's exactly what price did. It respected the blue area to take us to the purple, and then this is a decision-making area right now. So it's either we gonna use this to go higher and run to some of those targets we have on Bitcoin to the upside, or Bitcoin is gonna trade down into the 91,000 area before its next potential move higher. So if not this purple area, then I have this weekly fair value gap. I like the 91,000 area is kind of a sweet spot around there. I kind of like it anywhere between like 88 to 91. I like that on Bitcoin for higher. Anywhere from 88 to 91. I like Bitcoin there for higher. Now, I ain't gonna lie. If this fair value gap don't work, Bitcoin's dead. Bitcoin. Matter of fact, let me play it safe. Let's go a step at a time. Let's go a step at a time. There's a bull case. There's a bull case inside of this wick. There's a bull case inside of it. That's the only reason I'm gonna take it a step at a time. Right now, let's look at these two areas, this and this. All right. That's it. That's only two areas I'm looking at on the coin. I'm still bullish on Bitcoin, which leads me to NASDAQ because I'm still bullish on NASDAQ. Yes, I said it. I am still bullish on NASDAQ, despite the world being extremely bearish. Okay, so the world is bearish on NASDAQ. Let's talk NASDAQ for real. Let's get into it, man. All right. Y'all seen y'all president do the whole bombing thing and this, that, and the third. So it's a lot of like geopolitical tension out there. And let's look at areas you need to see respected. For bullishness, I need to see this area respected on the weekly chart. Do I think that we are going to go to this area prior to running all-time highs? No, I don't. I don't want it to happen. I'm open to it happening. I don't want it to happen. I would expect us more so to turn around in the short term and go towards all-time highs right away. On the daily chart, I even think today is going to be a green day personally. I almost don't want to stand on this because it's pretty speculative, but even when price opened up, I told my mentees, I said, this is probably going to be the low of the day, literally. I said, that might be the low of the day today. I'm not standing on that because it's somewhat speculative, but I'm just saying, like, I am not really sold on bearishness. I'm gonna be real. Despite the news. Why? Why is that? There's a couple different reasons. So we didn't accomplish anything on the upside. You feel what I'm saying? This daily bearish fair value gap is out of context. So yes, we rejected it, but it's out of context. I think that it's just turbulence before we make a move towards all-time highs. So I'm not really tripping on that. And what I mean by it's out of context is I wouldn't be looking at a daily bearish fair value gap in this context. So this is another thing what I mean with you can't, if you're going to trade fair value gaps, you can't be looking at the wrong fair value gaps. This fair value gaps is completely out of context. Like you can't be here on June 22nd looking at a fair value gap from February 21st on the daily chart. So it's context, right? I could do that on the weekly chart, but now on the daily, and even that probably is confusing for some of y'all. But I'm gonna get off that point. All I'm saying is it's out of context. So either way, I think we just consolidating before a move higher personally. And whenever everybody's on one side, I tend to take the other side, not even just to be a contrarian. It's like that's really how the market moves, right? Like they can't have everybody joining them on a move, so they tend to kind of fake you out with media and everything while they, make the opposite move that the media is telling you it's gonna make. Everybody see the war potentially breaking out. I think everybody expects a massive flush. I've seen it all over social media. Yo, puts are gonna print myself. And so here's my two scenarios on NASDAQ. I think it's either we do a flush to take out all of this liquidity we had engineered, We could do the flush. If we do that flush, we need to hold this general area right here to run all-time highs. All right. Or I favor very minimal downside, maybe even chop tonight right here, and then a move to the upside right away. I think I favor the arrow on the right. I favor the arrow on the right more than this one. And of course, you have the third option, which is literally, yes, we just started a whole reversal right now. I think we have a bear market under this blue rectangle. Under this blue rectangle, I'm just strictly bearish, and we have a whole bear market into these lows. I just don't think that's gonna happen. I just don't think it's gonna happen. For clarity on what this blue area is, one thing I'll probably just have you do is, as long as NASDAQ can stay above, actually it's on a daily chart, my bad, y'all, daily chart. As long as NASDAQ can stay above as long as it can respect May 9th candle, Friday, May 9th, that red candle on Friday, May 9th, I'm bullish on NASDAQ. As long as it can respect this. If it invalidates that, we're in a bear market, in my opinion. Will it even get that low? I don't necessarily think so. But we will see. It's gonna be interesting to see what price does tonight. It'll kind of help me with my projections. Like, obviously we are inside of a massive consolidation, so it's always tough to judge. But I still lean bullish until further notice. I don't care what the news is talking about. Y'all know me for that. I don't care nothing about the news. It doesn't matter. It does not affect price in a real way as far as direction. It affects price as far as timing, but the direction is typically seen before the news event. Okay, and so that's why I don't really care what the news is telling me. The news could tell me to be bearish, but if the chart is telling me to be bullish, I'm gonna be bullish. And my track record versus news, I'm pretty much undefeated. Like, I don't, you know what I mean? So, but once again, where we're at right now, I wouldn't say that the chart is giving me the clearest direction. So that's why I had to give y'all scenarios here. But for a time period, if the chart was telling me we're definitely bullish, I don't care what war news is dropping. If the chart was like screaming bullishness to me, I would come out here with a bull mask on and a Chicago Bulls jersey, telling y'all, yo, we bullish. I don't care how many bombs got dropped. So yeah, but that's that. And here go ES. And so ES, like, similar vibe, really. I think it's gonna move higher. You've seen we had gap down, we pushing up already. This is also a bad sign for continuation. I'm gonna be real. Like, even looking at ES right now, this is not what a bearish person would want to see. I ain't gonna front. Let me find out this really was the low of the day. Let me find out. Because I definitely called that at 6 p.m. on the dot, basically. I think it was like 6:02 or something. I said that. It's in the chat. It's in my mentorship chat. But we'll see. We'll see. It's still speculative for now. YM. Yeah, we in consolidation. Something to say about this ticker. I would stay away. There's nothing to trade on here. But we'll see what the overall market sentiment is. If it starts making a move higher, I love the way that we're dropping, because if we go bullish, we should take it in one straight line. So the way that we're dropping it's amazing for a bullish run right there. We love that. There we add, what's next? Let's go gold. Gold right here. What's gold on? So gold, I don't like the setup on gold for trades right now. I don't like it because it's pretty much, first of all, we're in consolidation. Like, to be clear, we're chopping in both directions. Bad work. I think it's gonna make a move lower though if I had to choose. Like, I don't want to say I'm sure. Like, I don't like speaking like that, but the highest probability right now is that gold makes a move to the lows of Monday, June 9th. I could see us running Monday, June 9th, and I would probably aim for the 50% of this wick right here. Right about right there. I'll aim for like the 50% of that wick. Personally, if I was looking at gold. So I think it's gonna make a move lower, but I'm just saying I don't like the setup regardless. Let's see what CL is talking about, which is oil. Where is my oil? I passed it right there. I actually didn't really get a chance to like look at it. If you guys remember, we called CL's bounce right here on this fair value gap. We called this bounce and it went crazy, but it's been consolidating ever since. I see today we gapped that, we pushing down. As long as CL, Come on. As long as CL could respect this red candle right here, I would expect continued upside on CL. Once we come under this, I expect it to run these lows. If we lose this red candle in the 4 hour, right, I expect CL to run those lows. If we hold it, of course, we'll push back up, and CL will probably push into $80. All right, so that's that. Yep, that's that on CL. And we talk about gold. I mean, nothing on Q. Oh, actually, the only thing I'll say about QQQ and SPOT both is I don't see us coming up here and not running all-time highs. I'll be very surprised. That's all I'll say to that. Be very surprised. I think we consolidate before we break out to the upside. If I seen this on a 1 minute chart, I wouldn't be selling my positions. So I'm not gonna sell my position on a daily. I'm not in QQQ swings, but for lack of better words, I'm not gonna sell my hypothetical positions on a daily if I wouldn't have done it on the 1 minute. Understand? So, well, we'll see. We'll see what happens overnight. If we get ultra bearish overnight, and then I'm gonna anticipate that deeper retracement, which takes, I think the Qs it'll take the Qs into this area before going back higher again. And once again, I think if we just lose this overall area, we're in a bear market. Like, we're in a bear market. So, but yeah, y'all know the scenarios. I went over that on NASDAQ already, the futures version of NASDAQ. I talked about SPY already, and yeah, I'll leave class right there. There's some, it's a couple option setups that I like, but just for time purposes, I'm gonna leave it right there. QQQ and SPY, same sentiment, same vibe. So y'all know me right now. To sum it up real quick, it's just like I do still remain bullish despite the news that's in the air. There's just a couple ways on how that bullishness can happen. Just to reiterate, it's either we're going to push up in the very short term and kind of shock everybody. I know some bullish news is going to hit the media where it's going to be like, oh, Donald Trump calls peace for the world or something like that. You're going to see a massive green candle. It's going to happen. That's how they always, find some news to support the candles. So that'll happen in the short term, potentially. The second scenario I have is us running out this whole section, but still respecting this general area. And then we could go to highs after that. That's my second favorite scenario. And then my third scenario is just simply like, yo, if we don't hold that circle, we in a bear market. So that's it. So yeah. So I have for y'all, man. If you're watching this on YouTube, definitely like the video, subscribe to the channel, join the live trading. That link is in the description box. Join the free community. That link is in the description box. The mentorship is open again. That's great news. It's open again. So registration is available. That link is in the description box as well. We have buy now, pay later services and everything. So get in touch with me. I got free one-on-ones available. Holla at me. With that being said, it is all she wrote.